Hello, everyone. I want to thank you for joining us on our webcast today that's sponsored by RGP Healthcare and LeaseAccelerator. We're going to be tackling GASB 87, a more detailed look. We have invited academic medical centers, universities, state and local governments. So we'll be sharing topics that are interesting to all of our constituents that are on the phone today. Thank you again for joining us. So to start, I just want to remind everyone, I'm Joni Knoll. I'm a Senior Vice President of RGP Healthcare, and we are offering one CP credit today, so you have to answer at least 3 of the polling questions at different intervals during the webinar. We're actually doing 4 questions, so you need to answer at least 3 of those, but we'd appreciate you answering all 4. Please complete and submit the survey evaluation form at the end of the webinar. We'll remind you again at the end. Ask questions in the Q&A box. It's on the lower right-hand side. Video replay and slides available on demand. And if you have any technical issues, please email us at webinars@leaseaccelerator.com. So our agenda for today, we're going to talk about 4 areas. Where are you in your lease accounting implementation project? Second, new policies, processes, and controls to meet the compliance requirement. 3, where to find your leases and the data needed for compliance. And 4, manual versus automated, effectively managing your resources for initial and ongoing compliance. So today our speakers are Dennis Carey, he's a solution consultant with LeaseAccelerator, and Tim Tickle, he's a director with RGP in our healthcare practice and in our regular RGP practice. Dennis, can you share 30 seconds of your background, please?
Sure. Thanks, Joni, and good day, everyone. I'm Dennis Carey. I'm a solution consultant here at LeaseAccelerator, so I really wear 2 hats. I'm meant to be the subject matter expert, so understanding the accounting standards and how to apply them, as well as being the product expert, so being able to demonstrate the software, talk about how the software can help you meet your needs, and work with you through the sales process. I've been in the software business about 5 years now between LeaseAccelerator and a treasury management software company. And prior to that, I'd been my entire career in corporate finance, corporate accounting, and corporate treasury. I'd been at Hasbro, the large toy and game company, for over a decade, and also at a large regional supermarket chain towards the end, working in accounting for our owned and managed shopping centers. And as Joni mentioned, I'm joined with Tim Tickle on the call today. So Tim, if you can take a few seconds and give us your intro as well.
Sure. Thanks, Dennis, and good afternoon and good morning to all on the webinar today. My name is Tim Tickle, and I'm a director in the national practice for RGP, focused in technical accounting, and over the last 3 years have been heavily involved in the lease accounting standards, and not only within GASB, but also within ASC 42 and IFRS 16. My experience is I spent about 15 years in public accounting, a commensurate amount of experience in the corporate world, working in executive roles for a Fortune 100 company, and also have been with RGP for about 5 years, leading a number of our leasing engagements nationally across all of the accounting standard platforms, and most recently getting heavily involved in the GASB 87 implementation, working with some of our initial clients and working through the roadmap towards compliance. Joni, I'll send it back to you.
Thank you, Dennis and Tim, for sharing your background. So now we're going to start with our first agenda item. Where are you in your lease accounting implementation project? Send it over to Tim.
Yeah, so thanks, Joni. And what I've presented here today is what we consider to be kind of the end-to-end methodology for the deployment of GASB 87. And it is meant to be somewhat linear, although there is overlapping kind of components to each of the major phases of the implementation. But the reason why we do suggest kind of working through the methodology in the order presented is that there's a number of requirements that you're going to be gathered in each phase that kind of play heavily into the next phase of the implementation. We start off, in the GASB 87 arena by doing a full assessment around the leasing portfolio to identify what leases are currently out there. And we also do a number of different procedures to ensure that that portfolio of leases that we've identified is complete. And that includes also the embedded lease component that a lot of entities as well as governments have struggled in kind of applying and identifying, as these are contracts or leased assets that are not necessarily in lease contracts. These may be hidden within service contracts. We also look at policy as it relates to the standard, and look, more importantly, look at some initial tabulations of materiality. And the reason why these are important is these are going to drive ultimately a number of the activities that you moved into in later stages. In the process transformation phase, we're mainly looking at not only how we are going to be compliant, but more importantly, how are we going to remain compliant over time. So this is going to involve a cross-functional development of a new process to ensure that when changes occur in the leasing database, they are communicated in a timely fashion to those that are responsible for the administration of the accounting solution. The third major component of the implementation is the data collection phase, which is more than just gathering contracts. This is actually gathering contracts and then ultimately abstracting data and validating data out of those contracts so that it can be used by your technology solution. And this is very time-consuming, and there are anywhere between 60 to 100 data elements per contract that have to be mined out of the actual contract itself and then ultimately uploaded into the lease accounting solution. And then lastly is the technology strategy. And this is the component of the standard that I think is probably the easiest, which is somewhat counterintuitive for those that have done implementations of softwares in the past. But due to the fact that these implementations have been done for the last 3 years, there is a rather routine methodology to deploy them. And so, ensuring that you get the right solution that's right for your organization, that's going to provide the reporting that's necessary, is the key here. So as you can imagine, the first 3 phases play heavily into choosing the appropriate technology solution that's important to you. At this point, I'll pass it on to Dennis to see if he's got any additional items that he'd like to talk about related to where you should be in your implementation roadmap currently.
Yeah, thanks, Tim. I think one thing I can say is that both Tim and I and our organizations, RGP and LeaseAccelerator, can draw on a lot of experience in implementing hundreds of public companies under the ASC 842 standard that came into effect last year. So what we've really seen is that leasing portfolios, there's no 2 leasing portfolios that are going to be the same. It's not we're a public university, so we're going to be the same as every other public university, or we're a city, so other cities are going to be the same. It really does come down to your leasing portfolio. And even there, again, not just the number of leases, but it's really the types of leases you have. It's the size of the portfolio, but then it's also the age of the leasing program. Do you have leases that you're towards the end of a long lease, or do you have a number of leases that are just beginning, so you've got a long tail on your leasing program? It's the complexity in terms of the number of participants. How many lessees do you have? How many lessors do you have? It's just the volume of data that has to be extracted and used to manage those leases, because it's as much about the management of the leases as it is the accounting for the leases. You manage the leases appropriately, and the accounting should flow from the management of those activities. So it's also the complexity of your organization. Do you have a very centralized organization where there's only a couple of people involved in the leasing program? Or do you have an organization where there's a number of people all over the university structure, all over the hospital, all over the state that are managing these leases, and you have to make sure you're assembling all that data together? And then a leasing portfolio that has a number of office buildings or a number of buildings can be a much different portfolio that has master lease agreements for large numbers of IT equipment. So again, it's thinking about not only how many leases we have, but the makeup of those leases. And the more elements that you can consider in your leasing program, the more complex it may be to extract all your data and integrate that into a solution. And another thing that we can say from our experience is it's going to take longer than you think. Anyone that says that this is a project that you can do in a matter of weeks is not looking at the big picture. They're looking at the top of that iceberg. They're not thinking about everything that's underneath there. This isn't just getting leases into a system and generating debits and credits. This is an entirely new business transformation project, and how you're going to manage leases going forward. It's a big change to have leases where you had leases that were off balance sheet, and once a year you had to do a quick contractual obligations report for your disclosures. I had to do that myself at Hasbro, and I know how much time and effort I put into that disclosure. Now everything's going to be on the balance sheet. There's a lot of work that goes into making sure your lease population is correct when you start using GASB 87, but as importantly, making sure that your lease population is correct going on through the entire life cycle of those leases. So it's not just about getting the accounting right and getting the disclosures right. It's about everything else underneath the project that can lead to the complexity and also lead to the opportunity you can have to use this truly as a business transformation project and make your lives easier going forward because you're managing the things in a more effective manner. With that, I'm going to turn it back to Joni because we're going to do our first polling question.
Okay, thank you, Dennis. So our first question will be, where are you currently in your lease implementation project? Not started, assessment and policy stage, process transformation, data collection, technology strategy or software implementation, or completed? I'll give everyone a few seconds to answer. Okay. So I'm going to let Tim. What are your thoughts around where people are? Lucky person's completed, or people are completed.
Yeah, I think the results are pretty much what I would expect. Obviously, in the early phases, they're not started in the assessment and policy. For those that are in the technology strategy, one thing that I would caution everybody to, as it relates to the implementation methodology, is a lot of entities kind of dive right in at the software selection phase. And I think it's very important to understand, by doing the assessment and the process transformation, what you're going to require your software to do. And more importantly, what are your required outputs from that system in order to select the software correctly. So I would just encourage that, if you are in that software phase, make sure that you've vetted out those business requirements through the assessment and the process transformation so that you know exactly what the system needs to do. But overall, I would expect that most of the effort is being done either in the assessment policy and the data collection, or currently not started.
Okay, Dennis, do you have anything to add?
Yeah, I'd agree with a lot of what Tim said. I think the timing where many of you on this call have a June 30th year end or a September 30th year end, you're about where we'd expect. We know you were going to get through the holidays and then start into this pretty strong right after the beginning of the year. So yeah, and I think the order of these, like Tim mentioned, these were put in an order that we like to see a successful project. It's doing the assessment of your needs. It's understanding what your policy is going to be and how that's going to help you, identifying that process transformation, and then getting into the project itself. Understanding your policy and your process is going to help you in your data collection, because you're going to know what pieces of information from those leases you're going to want to gather. The last thing you want to do is go through all of your leases and then start into the project and realize you missed one data element. Well, that's not just one data element, that's one data element on every single one of those leases, and having to go back through all of those again. So for those of you that are not started, well, you actually have started. You're doing part of your education right now, and that's a good sign. And for those that are further into the project, you're progressing along as we'd expect.
Okay, thank you, Dennis. So we're going to move to the second agenda item that we were discussing, which is new policies, processes, and controls to meet the compliance requirement. I'm going to turn it over to Tim.
Yeah, and I think this ties in well with the last, kind of the results from the last poll question, Jenny. I think there was a very small percentage that were actually in the process transformation phase. And for me, I consider that to be the most significant component of the pre-work that needs to be done because, this is not a race to a finish line with the implementation of GASB 87, but more importantly, this is a race to a starting line. And so we have to have a fully vetted end-to-end process ready to go on day one so that we can sustain compliance with the standard over time. And what does that entail? Well, it requires not only the development of policies that kind of govern the process that your organization is going to take, but it also requires lower level detail process mapping that's going to ultimately identify all of the roles and responsibilities of each participant in the lease procurement process to ensure that when not only new leases occur, but even when leases are modified or terminated early, that information is funneled along to the appropriate individuals and that there is a process and an understanding within the organization of what those responsibilities are. Now, for those of you that have ever done change management on a broad scale before, you understand that this type of change is not something that occurs overnight. And so the development of the processes and the controls and the policies early on in the project actually serve very well as change management material that you can use to then reach out to the organization and begin to educate them on the changes that will be required going forward. It'll enable you to initiate some training as it relates to what those new roles and responsibilities will be within the organization. It will also enable you to be able to, refer back to documented policies and processes that ultimately can be used by the members of your organization to guide them along the process. So, the development of the policy and the processes and the controls is a lot of times, pushed off to the end of the project, or even not really well vetted as part of the overall project. And essentially, this is a very high-risk area for potentially a failure after the compliance adoption. You may get 3 months down the road and realize that there's been a significant change in your leases that we just didn't have the right processes in place to ensure that those got captured and communicated. And so therefore, we're back at square one. We have to go back and evaluate what are our leases as of today, and we have to then almost re-implement at a later date in order to refresh and get your database of leases current again. So there's a high risk to missing this exercise. There is a long learning curve as it relates to the deployment of this particular component of the project, simply because significant change management takes time to communicate and make its way through the organization. So taking the time to, early on in the project, to actually envision what it's going to look like, working across the cross-functional groups and developing what it's going to look like in day two when a new lease occurs or when a lease modification or termination occurs will go a long way towards beginning to shift the organizational culture towards a new process going forward. Dennis, is there anything that you'd like to add in this?
Yeah, so I think one concept that Tim mentioned very briefly, I'm going to mention it again because if there's one thing that I want you to take away from this call is the concept of not racing to the finish line, but racing to the starting line. That is something that was very important that we found with the public companies. They were looking at this date of 1/1/19, and they were saying it's getting towards the end, and I'm so glad we're racing and we're going to get to the finish line. And to explain to them that it's not the finish line, it's the starting line for an entirely new way of managing and accounting for all of your leases, So when you're going through the process you're going through now, keeping that ongoing compliance in mind, that's the most important thing to think about, is not, can I generate the right journal entries on July 1st, 2020? It's, can I generate the right journal entries and compliance reports after July 1st, 2020, and every other time I have to do it? Is this a repeatable process that I've created for when a new lease comes on, when a lease has a modification, when an adjustment's done, when a lease matures? So it's this ongoing compliance. It's thinking in your mind about this center of excellence concept, where you've got a key group of people that understand the process and can help to distribute that knowledge throughout your organization. So the people that understand not only the accounting, but the ways that you can manage the leases appropriately, so the accounting is very simple to generate based on the way you've managed it. It's the lease administration. Again, you are going to add new leases. You're going to have changes to leases. You're going to have to make decisions at the end of term. Those now have accounting impacts, so you want to make sure that you've got a process to manage those. Whether you do a monthly close process or quarterly close, or you just do it on an annual basis, there is still a process by which you are closing your books, making sure you've got all the compliance and the auditability of the information so that your internal and external auditors can understand the information, validate it, and agree that it's correct. Thinking about the systems and the data and how that systems and how that data fits into your existing financial infrastructure. Are you going to integrate directly with your ERP, or are you going to take a process where you can take information and upload it to your ERP yourselves? And then again, mentioning about this internal and external audits and how you're going to manage these processes. And then think about what happens if you don't consider that administration piece. If all you're looking at is, I need to be able to generate debits and credits and I want them to balance. Well, when you have a new lease come on, how does the system manage new information? Does it seamlessly load it into the existing portfolio? Does it give you the ability to do bulk processes if you have multiple leases? How do you handle middle of term and end of term lease changes, and at end of term, your decisions you're making? Is the system simply asking you, what is your leasing decision, or is the system asking you to do accounting? If you want to be able to automate this process and simplify this process, you really want to think about a system that allows you to manage the leases, and the system does the accounting for you based on your management decisions. And then finally, talking again about this leasing center of excellence. So it's having that core group of people that they don't have to be accounting experts, but they have to know enough about the standard to understand that the terms of the lease matter, that there's certain terms in the lease that you have to consider. You're looking at the initial term. You're looking at the concept of reasonably certain end of term options. So making sure people understand what the term reasonably certain means and how to apply it and how the accounting standard wants you to apply it. It's understanding modifications and reassessments. Hopefully it's having software that allows you to simply do those and it knows the accounting that results from those, but having the accounting knowledge so you can look at the resulting journal entries and validate them. It's how to handle the end of lease, and then also to how to handle this monthly close or quarterly or annual. It's how to make sure that the system locks down your information so it's not going to change going forward, because this same information is going to be in your ERP, and you know that your ERP, once you've reached end of year, you don't want any changes to happen retroactively. So other concepts to think about. I'm going to pass it back to Joni now, and we're going to do our next polling question.
Okay, thank you, Dennis. Our next question is, what is your greatest challenge with lease accounting? Is it process, policies, and controls, talent, staffing, and training, systems and automation, accounting complexity, or embedded leasing into monthly close process? I'll give you a few minutes or a few seconds. Okay, so it looks like the majority is processes, policies, and controls. We probably should have added all of the above because I think people might have issues with all of that. But I'm going to turn over to Tim for comment.
No, I think, Joni, I'm actually very pleased by the responses because, as I mentioned in the discussion, the process, policies, controls, if that isn't a challenge, then I would say you probably haven't looked at it close enough. Because again, it's a cross-functional, you're designing a new process that's cross-functional that requires buy-in from many different levels of the business in order to kind of design that future state. And then it's coming to an agreement with all those groups as far as who's going to do what and what those roles and responsibilities are. Additionally, I would say talent and staffing, that's another area that I think it's because it's so new. There's a lot of organizations that just don't understand what type of resources am I going to need, how best to structure them. Should we create this center of excellence that Dennis was speaking of? How does that report up to the organization? And so, trying to figure all that out on your own can be very daunting. Now, we have the benefit of having gone through this, a bunch of times over the last few years. So we obviously can provide a number of different options that we've seen in market. But I think, again, those are, to your point, Joni, I think the standard itself is probably the biggest challenge. But within that, the areas that have been identified, I think, indicate that people are thinking about this correctly.
Okay, thank you, Tim. Dennis, would you like to add anything additionally?
Yeah, I kind of agree with Tim that I'm really pleased to see the results that we have on the slide. We think back to the previous polling question, and Tim made a comment about don't be doing the technology choice too early in the process. I work for an accounting software company, and I still want you to make certain decisions and think about certain things before you decide on the accounting software. This is exactly right. Thinking about those policies and processes will help you understand the needs that you have, the requirements that you have, and then you'll be able to look at the software with a mind of how is this going to help me achieve my end result? How is it going to help me match my policies and processes against the software I'm looking at? There's too much of an inclination sometimes to look and say, I want to find the simplest and easiest. Well, when we look at the accounting standard, you realize it's not simple and easy. And the process that you're going to have to follow is not simple and easy. So it doesn't necessarily lead itself to, let me find the minimum product that will do the need. It really leads to what do I need to do and how can a software company or a partner help me achieve those goals that I have.
Okay, thank you, Dennis. So we're going to go to the third area that we're going to discuss, which is where to find your leases and the data needed for compliance. I'm going to turn it over to Tim.
Thanks, Joni. In the data collection space, I would say this is probably the most underestimated component of the overall project. And, just to add some real numbers to it, if you've got 100 leases, and you've got 60 on the low end, 60 data elements that you've got to capture. You now have 6,000 distinct data elements that you've got to capture across 100 leases. And not only do you have to capture those, and they have to be re-verified and double-checked prior to loading them into an accounting system. I think those are just standard implementation controls. Now, the good news is that, what we consider to be data abstraction from a contract, that is not something you're going to have to do in all cases. And the reason is that there is usually other repositories of data that you can leverage to identify those data or to obtain those data elements. Examples may be internal spreadsheets where maybe you have an organization that's tracking a fleet of vehicles for you, that maybe you're tracking them in a spreadsheet in order to administer those assets and leases. We can leverage some of that data in the data collection exercise. Additionally, there may be vendors that you work with, say perhaps a copier vendor that is managing all of your copiers for your entire organization. A lot of times those vendors will have those individual assets tracked within a database of their own, and we can obtain extractions from those databases that will simplify the data collection effort. And I think there are also tools that we've utilized that are artificial intelligence tools where we feed contracts through a software system that will actually capture the data elements for you in an automated sense. So the challenge is identifying and getting to where all of those sources of data are, and then effectively creating a data collection plan that is going to be the most cost efficient. Now, before you run out there and decide I want to do artificial intelligence on everything, there is a cost associated with that, and there are costs and there are benefits, and then there are downsides to it. And so, what we like to do is to identify what is the most cost-effective way to obtain that data, and then develop a collection plan that will produce the data that's required for the system in the least amount of time, as typically the data collection phase of a project is the most, time-consuming, but there's the shortest amount of window to get it done in order to meet deadlines. I'd say another significant challenge with data is that while you're in the process of going out there and finding your data, it is changing. So on a day-to-day basis, through this implementation process, which will be several months, you have to contemplate what is, a secondary matter of obtaining changes that are occurring while you're trying to get your arms around everything. So a lot of times we'll have an incremental data collection activity that occurs after you've obtained the data on your original portfolio of leases. And that would represent the data that perhaps has changed over the life of the implementation, so that you can effectively catch up your accounting system to a representative lease portfolio as of the date of go live. Now, the last item on data collection that I will point out is that your external auditors will expect that there is a secondary validation exercise on the data. Now, this does not mean that you have to have a second person abstract all of the data on every contract and look at every component of the data collection and verify it. But what they would expect for you to do is to stratify your leases by value and by impact to the estimated liability, and select a sample of high dollar leases that will get you a significant coverage of your liability. Suppose you have 500 leases, but if you add up the first 50, you may get 90% of your liability balance. If that's the case, then we would sample test those 50, and we would sample test those data elements within those 50 leases that actually play a part or are taken into account in the calculation of that liability. So maybe we don't check the location of the asset or the GL code, but we are going to want to look at what are the payments, what are the start dates, what are the end dates, what is the reasonably certain holding period, the components that directly factor into the calculation of the liability. And then, as part of that validation exercise, it should be documented so that you can prove to your external auditors not only that you collected the data, but you provided this secondary iterative review of it that you can rely upon to basically satisfy the accuracy assertion related with the software implementation. So there's a lot of moving pieces in data collection, whether it be the number of data elements that you have to capture, the number of data sources that you have to go to obtain it, as well as the fact that your data is changing over the life of the project that you have to factor in. And so making sure that you have a thorough data collection plan that addresses not only the data for the leases that you have, but more importantly, the data for the leases that are continually changing will ensure that you are minimizing the number of times you have to pick up contracts and or search for data in order to populate and get your system live. Dennis, I don't know if you had anything that you wanted to share in this space or what you've seen in the data collection space.
Yeah, I think what I'd reiterate is just that this is what we've seen in the past as the longest time consideration in the project. It's the part that takes longer than you expect, and it's the part that holds up projects sometimes. You can make the vendor selection and they can get the system ready for your data, but if you don't have your data, you're stalled. So it's really thinking about this has to happen early to make sure that you're ready for the process. But again, thinking about your policy and process to make sure you're capturing all of those data elements so you only have to go through this once. And I believe now we're going to move on, Joni, to our next polling question.
Correct. So this is our third polling question. Where are you in your data collection process? Not started, contracts gathered, required data elements identified, data abstracted to upload in chosen accounting solution, data loaded and validated in chosen accounting solution, and completed and ready for go live. I'll give you a few seconds to answer. Okay, let's see the results. Okay, not started, which more than 50%, which is not surprising. Tim, what are your thoughts?
Again, I think that's very indicative of the previous polling questions, and I was glad to see that about the same percentage said they were completed in data collection that said that they were completed in the project. So that's always good. And then, again, the contracts gathered, I think that is the toughest component. And then, moving on there. So I would expect that to be somewhat linear as we move down the answers, and it's almost perfectly graphed out that way. So it's pretty indicative of where everybody is.
Dennis, do you have anything to add?
Yeah, I mean, again, we know the timing of a lot of you being June 30th year end, a lot of you being September 30th year end. We know you had to get through the holidays and other things that take time at the end of the year. So you're here now, you're getting some education about this. We don't mean to scare you, but we hope we scare you enough so it gets you to really move this up in the priorities as much as possible, because this is it's a big deal. It's going to be a big change, and it takes a lot of thought and effort to make sure that you get it right the first time. The worst thing to do is to make a decision and then go back and realize you made the wrong decision. We're finding public companies that are doing that right now. They're coming back and saying, hey, I chose the wrong software. What do I do? So again, being not started isn't a surprise. But like I said on the earlier slide too, you've actually started. You're doing this. You're thinking about it. You're obviously moving forward with your process.
Okay, thank you, Dennis. We're going to go to the fourth and final area next. And it's manual versus automated, effectively managing your resources for initial and ongoing compliance. So Tim, I'll let you start there.
Yeah, we brought in this concept of automation during the last section as we talked about AI tools for data collection, but I think I'm going to boil it up a little bit and talk more high level around what are the typical roles that have to be involved in not only the adoption, but more importantly, probably carried on throughout the sustainability of the process. So, typically, a lot of organizations are partnering with a partner to help them adopt a standard, and within that partner team, you're going to see a number of different roles, from an overall project manager to some SME, technical accounting SMEs, and then to data people that may be assisting the client in gathering data and validating data, and then ultimately implementation partners that ultimately deploy the chosen accounting software. On the actual client side, though, on the internal, there's a number of different roles that are ultimately involved in this process. And this, we typically see an overall project sponsor, and then we have, within organizations, it's either entity leads or sub-organization leads that would, participate heavily in the project itself, along with all of those entity or sub-entity accounting personnel. And the reason for that is ultimately that this is the handoff between the partner and ultimately the organization to make sure that, everything that the partner is doing, that the organization understands as part of the implementation, and then ultimately that they're thoroughly trained in order to carry on and move forward with it. But beyond those kind of integral components, there's a number of other different roles that are instrumental in a successful implementation. Accounts payable, maybe entity data analysts. Maybe there's some people or interns that you may be able to leverage. Maybe even in some of our universities, we've seen some grad students that have actually stepped in and provided some assistance in the data collection space. You'll typically see some involvement with procurement, and in some cases, IT, maybe even treasury on an ongoing basis, as they each have an individual component of the project that they're going to be likely very interested in, either providing the information, but also in a day two scenario, making sure that they have say in how the process is going to work going forward, and making sure that they understand what their roles and responsibilities are. So if you look at the roles on the right-hand side, I'd consider those to be, at a minimum, the member or the project team that's going to be instrumental in defining what that day two process is going to look like, and making sure that all of these individual groups are represented in that process design, and that they ultimately understand their roles and buy off on what is going to be expected of them to sustain compliance. Dennis, do you have some additional information on the roles and responsibilities?
Yeah, thanks, Tim. So, obviously it's getting all of the right people involved early in the project. Leasing touches a lot of areas of your organization. It's not just accounting, it's not just finance, it's operations, and it's real estate, and making sure that they all feel that they have a voice in how this is going to be done going forward is going to get that buy-in for when you actually have to start doing this repeatable process that you want to set up. We all know that there's nothing like being told what you have to do as opposed to being a part of the process in determining what you get to do. So another thing to think about on an ongoing basis is, how does this information get dispersed? So how do you train the appropriate people? Because in a lot of your organizations, the management of those leases is very decentralized. You're going to have people around the organization who are making those decisions. So training them on the appropriate process to get that information to you to be able to manage the accounting for the leases is one thing you want to think about. In addition, the people on this call, some of you may move and go on to other opportunities. How does your organization train the person that's going to be taking your position? You've got leases that may have a change, and maybe you haven't had to make that change in 9 months. How does the system train you, and how does the process get the education you need to recall what you may have learned once during the implementation training, but how do you make that training repeatable? Does your partner have online training that's on demand where you can simply say, I need to do this, how do I do it, and have the information available to you? And then finally, more challenges after the statement is adopted. Again, lessons that we learned from the public companies. The number one, obviously, the very biggest thing is make sure it's right. Have a process that allows it to be auditable, that your historical information is maintained so that when it's being audited, you can see what happened in the past, who did it, when they did it, but also how the lease was at a certain point in time, because that will tie to the financials at that point in time. It's maintaining the amount of time it takes you to do the books. You don't want this to add to the amount of time it's going to take you to close the books. So again, looking at that process and that partner that allows you to manage your time. And then if you have additional staff, if you're able to add additional staff, it goes back to the prior slide talking about training. How do you train them? If you can't add additional staff, Do you have a solution that allows it to be repeatable and as automated as possible, so you're letting the system do the work instead of the people? Having the system be able to do the work, generate the reporting, generate the entries, show you the audit trails, so that all you have to do is manage the leases and manage the process going forward. And with that, we're going to move on to our final polling question.
Thank you, Dennis. So the last polling question is, what are you planning to do from a technology perspective? Purchase a lease accounting system, use Microsoft Excel workbooks, outsource lease accounting, or unsure at this time? I'll give you a few seconds to answer. Whoops. Hit it too quick. So we're kind of not evenly split, but a lot of unsure. Tim, your thoughts?
I think I would expect, the initial thought process to be either between a software system or Excel. I think what we're learning from the public space is that Excel it becomes a monster to manage in the day two scenario. So if you're thinking about how you calculate your day one entry and get your right of use asset and liability captured, I think that is a perfect kind of what I consider a plan B. But if you think about the ongoing maintenance of a leasing portfolio using workbooks in Excel, what I can tell you is that will become very cumbersome over time. And you'll ultimately, I think if you look at an all-in cost, you'll probably spend more on manual time in doing it in Excel than you would for the cost of the software. And I can almost guarantee that, just simply because of the components there. And then I think the other watch out as it relates to Excel is the disclosures. The fact that those disclosures actually require a significant amount of quantitative data that's derived by having, the ability to calculate information across your lease portfolio. And it's very difficult to derive a lot of that information using workbooks in Excel. And so you may encounter a significant amount of time to derive the disclosure requirements under the new standard. And so I think, again, I'm not going to say that there's any drop dead number of leases, but I think if you get anywhere above 20 to 25 leases, Excel becomes extremely challenging as a long-term tool. It can be very valuable for a day one, especially if you are implementing a software and you want to make sure that you have a plan B in case something goes wrong with the implementation of a software. But relying on that for long-term administration of leases, I think, will over time be cost prohibitive and is not very scalable to an organization. Dennis, anything on your end?
Yeah, Tim, thanks. I have a kind of a personal response to the Excel, and we get questions all the time, like you mentioned, about how many leases would be okay to do in Excel. Is there a minimum number you recommend? And the story I can give is I was working with a public company, and they had a Big Four auditor helping them on the process, and they had taken one of their building leases. So they had a lease, and the auditor had created an Excel spreadsheet to show all of the entries under the old standard, what the transition entry should look like, so what that right-of-use asset should look like on 1/1/19, in this case for a public company, and what the entry should look like going forward. And he gave that spreadsheet to me and said, can you replicate this information in Lease Accelerator? Remember, this was on one lease. It was a complicated lease. It was a lease where they had started out with one floor of a building, then they added another floor. A couple years later, added another floor. So there were some modifications over time. And he said, can you match this information? And my answer at first was no. And it was no until he fixed the 14 errors that he had on this spreadsheet. Once he fixed the errors, we matched to the penny. And during the demonstration, he sat in front of the client, and he was great. He said, this is why you need a system. He said, I'm really, really good at lease accounting, and I'm really, really good at Excel, and I made over a dozen errors on one lease. So whenever anyone asks me how many leases are okay in Excel, my answer is I don't know if one's okay. Again, like Tim said, the rule of thumb is if you've got 20 or so, maybe it's okay. I can only give that one example that's very, very real in my mind of a Big Four auditor saying, this ain't easy. You need a system because I made a bunch of mistakes on one lease because it's Excel. It doesn't warn you when you're linking the tab for floor 3 to the lease payments for floor 4. Systems can manage that appropriately because they have the controls put in place where Excel is challenging that aspect. So with that, Joni, I'll pass it back to you. I know we're going to move on now to Q&A.
Yes, thank you, Dennis. So the first question I'm actually going to ask Tim, and then Dennis, you could add on, but how do you know which software is the right one to obtain, since I know we've worked with a lot of different software?
Well, I think, going through this is Tim, and going through the assessment and the policy elections as well as the process transformation is going to give you a lot of those requirements. I think, in the university space, what we typically see is that they have a very complicated reporting requirement on the back end, either at maybe at an individual campus, and then maybe at a system level, and then maybe even at a higher level at a state level. And so being able to consolidate across all of your leases and to provide all of that within one instance of the software, I think becomes one of the requirements that we typically see a lot of software companies fail on, just simply because, the way that their software is built, it's not meant to be rolled up and fed in that way from a reporting perspective. So I'd say for me, I think the one, especially in the government and university space, that is probably the most important is the reporting requirements. Make sure that the software vendor can meet the way that you need to roll up the data and how you need to report it. And more importantly, can they do that in a single instance of their software, or do you have to buy multiple instances and then consolidate in Excel or something like that? So that would be my response. Dennis, anything from you?
As someone that works for a lease accounting software company, I think I'm probably supposed to recuse myself from this question. I can say that in looking at the attendee list, I've seen people that I talked to as recently as yesterday, people that I'm talking to tomorrow. So I'll be happy to give you your answers when I talk to you individually as to which software is the right one to choose.
Okay, thank you, Dennis. So our next question, has anyone discussed materiality with lease amounts? I think I'll give that to Tim.
So I think materiality is obviously one that has a significant impact on the overall project. And I think, in some cases, our clients have been somewhat maybe fed their materiality from, say, a state level down to, say, a university system. But for those who have the ability to kind of draw their own materiality conclusions, we typically see a couple of different areas of focus. One, it's the old asset-based approach where maybe you're looking at the underlying asset and maybe tying some correlation to your capitalization threshold. But within the context of leasing, I think that we have been able to kind of expand that thought process of materiality to focus more on the liability side, since with this standard, what most of your auditors are going to be most concerned with is that your liability, so your right of use liability, is materially stated. And so that will usually trend you to a higher materiality amount if you can somehow base materiality on whether or not the exclusion or inclusion of a particular lease would move the liability in a material way. And so I think, materiality is something that you should discuss early on. The impacts of that is going to obviously drive you in the data collection and implementation phase. You definitely don't want to go out and have to find contracts that are ultimately going to be immaterial, or you obviously don't want to abstract data that is potentially immaterial. Or in some cases, we see a lot of clients that don't necessarily want to include those leases in their accounting tool, just simply from an administration perspective. And so there's a significant amount of impact to the overall project and making sure you get that right. And so that's why we have those discussions early on during the assessment phase so that we can get some clarity and provide our best practice in that area and ultimately come to an initial draft of materiality in order to move through the rest of the phases. Now, the last thing I'll say about materiality is in year one, you can expect that your external auditor will want to see everything that you have excluded due to immateriality. And so you'll have to be able to prove that in aggregate, the items that you have excluded as immaterial, that they do not add up to anything that would be considered material. So in the context of this first year and probably the first couple of years after the adoption, you're going to have to track the immaterial stuff some way or another in order to prove that the threshold that you've initially landed on is materially keeping that liability in balance. And so, choosing that level, carefully and making sure that you work with not only your partner as well as your external auditors and how you document that approach, and then ultimately understanding you've got to prove it in those first few years. So keep that in mind as you're working through that.
Okay, thank you, Tim. I'm going to ask our last question to Dennis. Public companies went live last year, and I recall that private companies got a delay, but GASB didn't. But I was wondering what we should learn from public companies.
Yeah, thanks, Joni. So I think also learning from the reason that private companies got the delay, and I don't know why GASB didn't delay. I suspect part of the reason is there are hundreds of thousands of private companies, so it may have just been there's not as many GASB as there are privates. So, and also a lot of GASB are mid-year and September 30th. But I think the one lesson you can learn from the delay is the reason for the delay. And the reason for the delay, one of the reasons is the AICPA put out a statement that said that the accounting standard was more significant and complex than the public companies had anticipated. So they didn't realize how long it would take to get their process in place, and they didn't realize how challenging it was to have this as a repeatable process. A lot of the companies were looking at January 1st and thinking, okay, great, I'm done. I can wash my hands of this and move on to the next standard. The accounting boards realized that wasn't the case, that there's a lot of public companies that were struggling, so they wanted to make sure that the privates were given more time. And I think that's the number one lesson to learn, is that you get to learn from their experience, and in many cases their experience was not very pleasant.
Okay, thank you, Dennis. Well, we're going to wrap up here with just a couple more slides. Sign up for our free on-site workshop. So if you've attended our webinar, we offer a free on-site workshop, the new GASB 87 Lease Accounting Standard. Key takeaways that you'll learn: significant impacts of the new standards, development, a timeline to implement the new standard, design a project plan, technology considerations, and a LeaseAccelerator demo, and anticipated implementation challenges. So you can contact us at partner@rgphealthcare.com. Again, that's partner@rgphealthcare.com. Remember to fill out your evaluation form for your 1 CPE accounting credit. View survey in the upper right hand of your console, and we appreciate your feedback on that. That helps us improve our webinars. And thank you for attending. We will be continuing to have more webinars as we go on, but we really appreciate your attendance today. And thank you again. If you want any of the information, you can, as we mentioned earlier, you can ask for it. It'll be on demand, any of our slides. Thank you.